Hello, Warriors. How's everyone doing? Hello, Mike, Jays. Who else is around here today? Maybe the other guys in the room can show their faces, just so people know we're not holograms. Hey.
I would not. I'm not showing my face.
You really
this
want to
early
see
in the
that?
morning.
Yeah,
No way.
Hey,
yeah,
check it out.
Look, Stella's benching 315. Did you see that? Okay. The three big plates on each side. Anyway.
There you go.
Yeah, there's Steve. So okay, he's got his
I'm
Trader Summit.
Trader Summit today. Yeah.
You know,
Okay.
Dale. You notice how we didn't get any of those shirts. Everybody's got Forex
Yeah.
Analytics.
Oh,
shirts,
you're getting
no
one
one
this
has
year.
Trader Summit shirts.
You're getting one this year.
I
We've
definitely
already arranged for it.
need to revamp my F.A.C.E wardrobe. It's about 6 years old. Some holes in them, but I still wear them.
All right, Dale.
material.
You said it. Coming your way, bud. You know
All
what
right.
we've got to do, and we won't do it this week because Ryan's not here. But when next month during our non-farm payroll giveaway, we'll give out a couple of t-shirts. I still have some in inventory before we have to buy.
Oh wow, great! Oh wow, that'd be a great early Christmas present.
And you need a few.
Oh yeah, I'm wearing the green ones. Remember how that was 6
What
years
size are
ago?
you? What size are you, Dale?
Well, lately I'm in XL.
Extra medium.
Okay.
And it has a little bit to do. I wanted to just before we get to the currencies and stuff, I'm pretty bullish on gold, but there's something interesting. I know, that a lot of people don't follow them anymore, but look at some of the moves that happened in the cannabis stocks yesterday, just because Biden is trying to decriminalize them. They're saying the big thing for these companies is for them to be able to bank and write off expenses and come into the real world. So you're talking about 40-50% moves just on Biden's statement, and then when you look at it, I mean, it's hard to chase a 40% move in a while, but look at where they've come from. That even if you get some type of bear market rally,
that's worth noting.
Yeah, so I was thinking of starting a fund with the miners and cannabis and calling it the Acapulco Gold Fund. You like that? I think
good.
it'd be a good marketing name for a fund, don't you think?
That is a good one.
A little weed and a lot of gold. So, all right. Let's get serious now and prep.
You know who you should get serious with? You should get serious with K-Man. He's only going to be with us like first half of the show.
Okay.
Because Ryan's out today. He's updating, what's happening on the Forex Flow Live account. He's also going to be in our chat room going over things, but he also trades multiple accounts, and so he's got to manage his money. So so K-Man, good morning.
How you prepping for it,
everybody? Good morning, Dale. Good early morning, Dale.
Hey, Iceman. Yeah.
Are you on an XL?
Huh?
Are you on the XL size?
Yeah,
I'd need a couple of those actually as well.
I'm 220.
XXL size.
We're still talking about the shirts, right?
Double XL.
Yeah. Steve.
Anyway, I don't really care what kind of number we get. I'm wondering, I'm going to try the euro down here. If we get it to 61.8, because the pound has such a nice rally. 61.8's all the way down at 108.
Yeah, I'm looking at trading dollars, but also risk, as I said in the chat room. So I'm going to be keeping a close eye on some of the crosses as well. But yeah, okay. The dollars should be binary, right? Get a report. People will look for the pivot. Get a strong report. Then they will recall what all the Fed speakers said yesterday, not hoping for a pivot in 2023. So we should see pretty decent moves. And then we have to add the Canadian job reports, which could mean a double whammy for the Canadian dollar. And we are on interesting levels, both in Dollar-CAD and in Euro-CAD as well.
Okay.
Yeah, I'm going to try to manage the dollar side on the one hand and the risk side on the other one.
Okay. How about the yen side on yen crosses, etc.?
Well, we were talking about that, and we always have to bear in mind what Kuroda was saying and the MOF confirming that any moves of 200 to 300 pips in a day they consider as excessive. So we're looking at the levels, and there's a couple of really interesting levels between 147 and 148, which is exactly 300 points between those two and 300 points from where we are now. So yen traders should be aware of those comments that we had just before the interventions and during the interventions. So if ever we get a really good report and the dollar yen speculators want to take it up there, we should be really mindful of those levels up there and the width of the market move. If we get a bad one, I think the zone to watch again is 143.75, 144 the figure. That's been holding rock solid apart from one little stop hunt. So those are the extremes. But if it's a good one, then we have to look at what happens in the 10-year dollars and also the 2-year dollars. Evans was talking about this 4.5%, 4.75% again yesterday. So if it's a good report, I wouldn't exclude the US 2s to reach that level. We're at 4.28 right now, and the dollar 10s to revisit the 4% and see what happens there.
Yeah, Gregor thought we would. These two charts, look at this. They're almost identical. Like you have the little zigzag, you know, and we're stalling. In fact, the dollar looks weak, like a little bit weaker of a chart, but they're pretty similar. I don't know why I punched that, but
are we?
Go
ahead. A lot of charts will look the same in slightly different amplitudes of moves.
Right.
For instance, sterling is moving a lot more because of local issues, but they all look pretty much the same, right? We were talking about the cable, by the way, on the flow show, and both fundamentals and just basic pictures and Gregor's waves were pointing at a very important level around 109 in the cable. So that's one that I'm going to keep a very close eye on, and looking at the amplitude of the moves that we saw lately. We can't exclude a 300
no
the cable. Who will?
No, we can't. And okay, so EG's given some back. Still like it?
Range for now, in between the goalposts. We've identified those two zones, like 86.5, 87 on the downside, 88 figure a quarter, figure 30, I think, on the top side. So we're trading in between, and it's one of the pairs that I'm looking at risk related this afternoon as well. If we get a really bad report and risk gets hammered, it could be that euro sterling is going to test those highs again, and why not trip a little bit higher, because sterling is de facto nowadays a bit of a risk currency as well.
You know, K-Man, I want to say, I think a lot of people don't talk a lot about, like, what if it's a really bad number? Like, you know, there's a situation out there, in my opinion, where we have, you know, I think everybody's expecting a weaker number, myself included, which means that we're probably going to get a good number, you know, and I think we need to talk about what both of those situations look like. But let's say we actually do get a number that is really bad. Like, let's say the, you know, unemployment rate actually ticks up a couple of tenths, and we have a jobs number that we actually lose jobs. Like, let's say the job number comes in slightly negative. That would constitute a really bad jobs report. And I don't know if the market
would explode.
Well, you would think that stocks would explode, but I would sell into that risk immediately. So, like, that's a situation where, you know, I think the knee-jerk reaction is stocks go screaming higher, but that's a clear opportunity to sell into strength today.
Blake,
I
Sorry.
agree.
Yeah.
I mean, risk will be a factor if the report is really bad, and I agree on that. Yeah.
Yeah.
I agree with that, but with a small difference, not on a negative number. Negative number is going to really spook the market, and it's going to bring us really close to the Fed basically changing their tune. I think a number like
Really, even ahead of inflation, the CPI data is what really matters, and that's next week. So
yeah, but
I don't know if the market's going to get too ahead of itself right now.
You are right. Although CPI is a lagging indicator, really what we're looking at is PMI's employment. That's the stuff that I think personally is more important. I'm guessing the Fed is going to be doing the same. But I would agree exactly with what you said, but with a number of something like 100K. I think
Like
100K,
negative
120.
100K?
No, positive.
Oh.
100 to 150K. I think the market's going to like it. We rally.
Oh, yeah.
That's where we sell into. I think on a negative number, I'm not sure about that. That will be too big of a shock.
I think the initial knee jerk is like, oh yeah, like good weak number, and then you just sell into it. But I don't know. But anyway, K-Man, what else are you thinking going into today? Do you have any handle on the yen? Like I was short the dollar yen going into this week. And when it dropped to 144, like 10, I don't know, Tuesday.
Never
maybe.
Gave you much, did it?
It didn't. I covered it. And then I actually shorted it again at like 144.80, covered it for like 144.60 or something. I played it a couple times on the short side. I have no dollar yen exposure right now, but how do you feel about the dollar yen here? I mean, obviously, the MOF isn't too worried about prices right now because the dollar yen may be here, but look at all the other yen pairs. They're lower.
Yeah, correct. But the main benchmark will still be the dollar yen, right? They do look at stuff like euro yen, and investors are very heavily invested in Aussie yen as well. But here, I think, as I was saying, you've got 100 points to the downside. If it breaks below 143.75 again, I think there may be more to run. And then the top side, it's all about testing where the MOF and the Bank of Japan will be sitting. Mike was asking, do you think they're leaving offers? I don't think right here and now. They will have a look at the market, but we have to be wary of the fact that if it shoots up, they might come in, right? So for the time being, open play in the dollar yen, but I will, if it's really a good number, and if I'm not too late, I will try to accompany any 150, 200 points rally and then quickly take profit if I can.
Yeah, I just wanted to mention the metalheads that the white stuff is still leading. I don't have a palladium chart, but that's a leader, followed by platinum, followed by silver, followed by gold, and bringing up the rear, copper.
Silver is interesting because it helped really well, right? When the rest of the dollars and the yields came back up, it did hold pretty well, and that's one which is on my radar. Get a half decent number and seeing some.
Be a buyer at 1950.
Even higher, right? I think 20 is already a bit of a level to
Blake
higher.
identified that.
Of course, 1940-60 zone.
Yeah.
Because if you get a half decent number, there's also not too much reason to sell risk, and silver may be actually one that finds a bit 20 or not too far below.
Okay, thank you. All right, Blake, you want to take over the charts here? You could go if you have to leave now, K-Man.
Thanks very much. And
I think you've told us everything you know.
Under control. Watch out for saloon doors. They're freshly painted again.
Saloon doors. Think about that.
Unusual
I know the first time he said that, I was like, what's he talking about? And I'm like, oh yeah.
Don't let him hit you in the butt.
Ways, hit you in the ass on the way out.
Yeah.
All right.
I love it. Hey, just going back to your the metals. I mean, if you look at silver, at 20, it's really the reason why it's such a big deal. Not only is it a breakout point here, but it's also a 38% retracement. So that's
Yeah.
that's a pretty big deal. And you can see that nice, bullish consolidation here happening with the with silver. Also gold's the same way. I mean, this is a pennant. So the way that these metals are set up right now, they are set up and they're going to work really well with a weaker number. And even if the number comes in at, sub 200K, and the unemployment and maybe the mortgages, the wages, play ball, we might see a good rally here in these precious metals. Matter of fact, K-Man, before you go, and I know you're going to be checking out here, what's the most important piece of the jobs data today? What's the component that you're looking at? Is it the headline number, or are you looking at wages, or what are you looking at? Dude, I think we lost him.
I said he could leave. I'm sorry.
Oh, well, it looks like Stelios wants to say something, but I really don't want to hear from Stelios.
Okay.
So, Steve, I'm just kidding, Stel. I'm joking.
I was going to say,
what's the most important thing for you?
I was going to say, all three are equally important, but the market's going to care about the headline number more. That's the thing. I've been looking at average hourly earnings for a while now because, the gap to inflation is growing. So for me, that's pretty important. But the market wants to see the headline numbers, what they react to.
Yeah, and the Fed's actually looking pretty closely at the participation rate, and they are looking at average hourly earnings, and I think all of this data is going to be really important today. So it's not just about the headline number, and I know the market reacts to the headline number, but I think whether you get a continuation of the move or you get a reversal of the move probably has to do with more of the data that's behind just the headline, right? And Steve, what are your thoughts here?
I don't have anything to add. We've said it the previous few days. Market is
about the
hoping
jobs
for bad data
specifically.
Yeah, market. That's what I'm talking about. Market is hoping for bad data because the bull's case is purely dependent on central bank pivot. That's it. That's the thesis. End of story. So in order for them to have their hopes stay high, they need bad data, right? So if this is not a month that data go worse in the job market, I think we're going to have a deja vu of what happened with the CPI. The extent is not going to be that much because people this time, I think, refrained from betting so heavily as they did on the CPI, probably because some of them got burned by trying to do that. Yeah, mate.
Steve, I was just going to add, we say the market is once a weak number. If you look at the range of estimates from the banks, I think the lowest one is 200. So it's not really that low.
Well, no, I think you should. Yeah, I think you should probably say that the market, retail, or people want a weak number. People want a weak number because the market has been selling off, and it's one thing that's going to support stocks. Everybody knows that's going to support stocks. Everybody wants to be a bull, and everybody wants to be an optimist ultimately. So
although in this case you're a pessimist if you're hoping on bad data, right?
You're an optimist.
Well, yeah, I guess it's funny. I was actually talking to one of my another parent about that late last night at my kid's practice, and he's like, I just I don't understand that, and he's like, but when my portfolio moves like several $100,000, I guess I'm kind of understanding it. I'm like, well, you should. But anyway,
I just invited Larry Summers to be a guest on F.A.C.E. You think we'll get him?
Yeah, hell yeah, that'd be awesome. Well, hey, we got about 10 minutes, and I don't want to downplay the importance of the Canadian data that's coming out today, and I think there's a few factors that we've got to think about because we do have U.S. jobs report. If you look at data flash, you also notice that today happens to be one of those Fridays where the Canadian data lines up on the same day as the U.S. jobs report. So I want to turn your attention to this chart because this is a
lot more volatile though as data sets, the Canadian data.
Yeah, but take a look at the Dollar-CAD just from a longer term perspective. We've been following this channel for the last couple of years, and we broke out of it, and it's been a bullish monster ever since. And I have actually just been I was just on the short side of the Dollar-CAD. I just closed my position out just a few minutes ago, actually, before while K-Man was talking. And we have this flag, right? So you can play a flag a few different ways, and I'm gonna show you the importance of this move. So first of all, if you're playing it inside the flag, being right here, and this is where you jump into the chat rooms, and you can see, oh, here's the positions people are taking. Here's the general chat room where you're discussing everything that's going on, and you can go over here and see the different charts that everybody's posting along the way and what the comments are there. So this is our chat room, and you'll be up to date and understand exactly what I'm doing regarding the CAD, especially when you're in this type of formation, because when you're in a flag formation, the 38% retracement is the what we call a shallow retracement in a very bullish trend. So you got this very bullish trend, you got this shallow retracement. So while we're above that 135 level, you remain bullish, like overall bullish. Just because you're shorting something, you could be shorting in a bullish trend. You could play both directions. I do. I don't necessarily say, oh, it's a bullish trend, so I have to only be long, because you cap yourself by doing that. As a trader, that's you can do it if you want, but that's not the way that I trade. I'm not saying the way that I trade is the right way, but it's the way that I trade, as I trade in both directions. Now we are at flag resistance, so we do have to understand that. That means these recent highs are these recent highs from last night are going to be really critical. So that comes in around 137.60. I want to point out that we over the last 24, 48 hours, we've been having this discussion about the Gartley pattern that's set up here, right? That Gartley pattern capped the rally, but Benedict, who's in our chat room, and you hear me mention his name quite a bit. He's been in he's been in my community for before we even had ForexAnalytix. So I've known him for so many years now. If he's just pointing out, this has been such a shallow retracement. I know it's ahead of the jobs report, but you have to imagine if the Dollar-CAD breaks higher, because we had a stronger US jobs report, which, as Steve just pointed out, is a risk because everybody's hoping for a weaker jobs report. But how about if we get a stronger one? And if the Canadian report's a little weaker, we could actually have a good rally here in the Dollar-CAD, and that could actually put us into a butterfly type of pattern, which would take us up to closer to the 140 level. So you got to look at the Dollar-CAD as being in a bullish structure that could really break out to the upside, because you could get a double whammy today. We've seen that on so many different occasions, haven't we, guys?
Yeah, of course.
Yeah. So
Yeah,
I mean,
yeah.
that's a risk, and I think you gotta be watching the Dollar-CAD. Yes, that's a Gartley. Yeah, that's capping it right now. Yeah, that's a flag pattern. Yes, the top of the flag is holding. Like I said, I tried shorting it, and it basically was break even. I lost a few pips. It wasn't anything any big deal, but I'm prepared for a bullish breakout if it does happen. Now there is another factor that's weighing in the Canadian and also the Norway. Take a look at what's happening in crude. What do you make of this crude oil move there, Dale?
Well, I think it could make a move into maybe the hundreds. I'm still not in the 150 camp. I know a lot of people have turned real bullish. I'm neutral, strongly neutral right now. Someone asked me last week what to do with it. I said I didn't know, but after a rally like this, I can't chase it. I'm not ready to sell it either. So non-trade. Looks like look at that divergence at the lows was
Oh,
good.
It was huge. Very big, a lot of divergence. And I
don't know,
remember
for me, it's hard to cover everything. I just I don't have a
it's hard
huge universe.
It is, but you know, crude is going to factor into the Canadian
Everything.
and
Yeah.
into Norway and into risk too. I agree.
Yeah.
So I just think that I look at the 200-day moving average, and I do not think that's off base now. And
No.
or you know, it's how should I say? You're going to be off base if you're short crude.
Yeah.
What I'm saying is this is not off limits anymore. Like where people were looking at the 200-day moving average and that failure here, they're like, oh my God, here we go. Crude's going to go back to 50. But hey, look, I think the 200-day moving average is going to be one of those is at risk.
It's like a magnet.
Yeah, I think it will be a magnet, and I think that's what is really going to determine, you know, where the markets start to look as bearish or bullish. You know, like right now, crude moving higher is moving up with risk. You can see stocks are moving higher, crude's moving higher. You know, that's fine. But if we start getting above that 200-day moving average around $100 a barrel, you're probably going to start to see that weigh on risk again. Anyway, but if crude breaks this 90.50, that could be very supportive of the Canadian dollar. So that's one thing you have to keep in mind, just in the event that the you know, you're thinking about everything else that's happening in the jobs report, then the Dollar-CAD starts to break out because we have some strong US data, but crude oil starts to break out. You have to think about that and how that's going to factor into the Canadian, if the Canadian's weakening, you know, on the jobs report. Just another thing, probably another thing that's going to keep me away from the Dollar-CAD. So let me ask you guys this. What are your best ideas following the jobs report? We got just a few minutes. For me, I'm going to say a weak jobs report. I'm still short, and I'm looking at the dollar Mexican peso. This is my favorite trade out there. These emerging market currencies are still holding up pretty well. You know, you can look at the US dollar, South African rand that's up against, you know, what I figure is very, very critical resistance on a weekly basis. So confluence right there. So but my favorite emerging market currency is the Mexican peso. So on a weak number, strong data, or weak number, I'm expecting strength out of the Mexican peso. If we get a strong jobs report, I think you can play the euro, you know, while it's below parity. I think you can play it right in this channel, right through this support. You can see the euro right here. We have a nice tight range. And if we get a strong jobs report, we should, you know, trade back towards, 96, 96.30. So like, let's say we create a quarter million jobs, maybe even a little bit more. That's what I'll be looking for. Steve, what do you think? What's your best ideas?
I think by far the best opportunity, if we get what the market participants are hoping for, like weaker data, is to play the metals, because the metals have been doing well during the past few days. So there is a clear attempt to overperform. Gold is testing key resistance. Silver pulled a little bit back from another key resistance there, but they're holding their gains. So in my opinion, the first beneficiaries are going to be those. In my book, weak data, metal play is the best place you can be.
All right.
Strong data, in my opinion, the best place you can be is short equities.
Okay, sounds good. Short S&Ps,
Yes.
or short equities in general. Stelios, what do you think? We got about a minute and a half, and Dale, I'm gonna want to hear what you have to say too.
I agree with Steve. Reminder, I still have half a position long silver from 2030. I put my stop at break even because really, if the data is bad, if it's good, then they're going to take out that level. But I think on a weak number, not too weak though, not negative numbers, any equity rally, S&P is like anywhere near 3900s, I want to sell that.
Yeah, I still believe the 3900 level, and this is something that we talked about a lot this week, is any rally towards this level is going to be a good selling opportunity. I agree with you there. Dale, what do you think? We got less than a minute. What are your thoughts?
Strong number. I'd look to be a buyer in the S&Ps as long as we hold 3680, and I be looking to be a buyer in the precious metals. Doesn't have to be today. A strong number could stretch it into maybe Tuesday, but looking to be a buyer of breaks on, PMs and S&Ps.
Well, since everybody's looking at metals, I think we need to keep an eye on yields there too. I'm gonna put up gold.
10 seconds.
10 seconds.
Okay. There we go.
So you'd better shut up. No, I'm kidding. Sorry.
Shut up. Here's the data. Okay.
Okay.
250 is
Here we go.
the
Here we go.
expectation for NFS.
263. Unemployment dropping by 0.2. Participation rate is dropping as well.
I mean, it's good data.
Okay.
Average hourly earnings missed a little bit.
Which means be ready. There is a very good possibility we're going to get a sell-off in equities.
Yeah, it's happening.
I mean,
as we were saying before, the bullish case and the bullish hope was for data to worsen so the Fed can pivot.
And look at the Dollar-CAD
pound
is
holding up.
moving.
Yeah.
Dollar strengthening, equities weakening for the time
So
being.
we got within 20 handles of where I was thinking of buying S&Ps. Yeah,
I mean, look
that
at
may
that
have
dip.
been it.
The dip just got bought, which is surprising to me.
Give it a little bit more time.
Yeah, gold. Look at gold. It dipped right into 1700 and bought. I mean, people are trying to buy I mean, everybody's trying to look on the brighter side here. I haven't done anything yet, but I'm surprised that we're getting the reaction that we're getting. Do you guys thinking anything here?
Thoughts.
You're having thoughts. That's good. Glad you're having thoughts.
I have no reason personally to change what I was thinking pre-data.
And look at yields, 390 now. So
we got decent data that should strengthen the dollar, and most likely that should also weaken equities. Now, as you know from my trading style, I don't tend to pay attention to very short-term moves because, in my opinion, it's noise. So I don't really care if we're going to see a little bit of a reversal of the initial reaction. What I care is to see how we close the day.
Yeah, you know what? I'm going to play the euro actually on the long side here while it's above 50. I'm going to put in a quick 20 pip stop, and I'll look for a move back up towards 98 cents. I think this is everything's going to revert right back to where we were. So anyway, there's my thoughts. Dale, I want to say, well, first of all, before we let you guys go, make sure you register for the Trader Summit event. It is free. This is, remember, we got like 24, 25 speakers. It's going to be an amazing event. So many great, and we're giving, 8cap is giving away 2 iPhone 14s to 2 registrants, 2 lucky registrants for a giveaway. I forget who won them last year, but anyway, make sure you guys, sign up for the Trader Summit event. Stelios, do you mind putting that link in the chat box?
I will do that.
Also, check out the Trader Funding Program. We have a new website, which is nice. So check that out when you get an opportunity. And if you want to learn how to trade our money, we just had our largest payout this week for the Trader Funding Program.
Did Stel deliver it with his silver briefcase and the handcuffs?
Yeah, that's exactly it. No, but it's cool because he was just like, hey, I want to pull some profits. He's continuing on, but he cashed out a pretty big chunk. So nice. Good stuff. Guys, I want to say thank you all for being here. Happy Friday to you, and good luck today. Dale, have a great interview.
Okay, Zach Mans is with us. Zach, welcome back to F.A.C.E, buddy. Thank you, team.
Thank you, Dale. It's good to be back.
Everybody.
Yeah. Hey, Zach.
How are you doing?
I'm doing good. Great to have you back on an NFP day. Interested in what you're thinking. Last time we talked, the S&P, that was before the severe sell-off that we had in a lot of stuff. I mean, silver made a new low. The S&Ps broke the double bottom. If you want to share your screen, I'm curious as to what you're thinking here, what your wave counts are showing. And then since then, we've had a great rally in the miners, and silver has really outperformed the gold-silver ratio, breaking down again. So here we go, S&Ps. All right.
This is actually, I'm going to come back
Gold.
to this chart. This is
Okay.
this is a ratio chart
Okay,
from
got it.
the the S&P and gold. I wanted to share. Bear with me 1 second. Gotta find the new share. This one.
You're sharing it. I see it.
No, I wanted to share. this
Oh,
screen.
okay. Okay.
Okay. So last time I was on was right around August 12th. And we wanted to see, you and I were both talking about a small fourth wave and then getting a fifth wave up, and then wanted to
Right.
hold a wave two.
Right.
And a lot of things broke that June low. So
Right.
while the NASDAQ technically didn't, RSP technically didn't, too many charts, especially that Garrett and I look at the sector ETFs and individual, pretty much key individual stocks that we were looking at being support for a rally to new all-time highs, failed to hold reliable support. Even if they didn't actually break the low, some of them came so close. It's really not prudent in our view. Doesn't mean it's not possible, but it's not prudent to be looking for new all-time highs. And I know we had talked a lot about wanting to see even more extremes of exuberance, that last January, or maybe even October, November, December, and January really didn't feel to us at the time like the extremes of exuberance in multiple degrees that we had wanted to see. But we had a couple,
even with meme stocks and everything.
so that's when we started listing out all of those things. Then the list starts to grow a lot, and it's like this little thing here, but in aggregate it really does all pile up. So we are very concerned now that was the top of that super cycle degree wave 3, the top of the primary wave 5 off of the COVID March 2020 lows, and that we're in for some rocky roads ahead. We kind of basically, we talked a little bit about alternation the last time we were here, just with regard to the wave 4 that we thought we were going to hold, even though it was deeper than ideal at that June low. And now we're looking at a different form of alternation, or different alternation, where the previous super cycle degree correction was that 1929 to 1930s. And that was more of a sharp, steep drop. And then it took most of the 1930s to build a base off of that low. We're looking at this being maybe more of like an expanded flat over, more than a decade, but possibly where that B wave makes even a nominal higher
I'll
high.
be dust in the wind by the time we complete this pattern.
Hopefully not.
Come on, man.
I may have Esrin, right? to 120.
All right. So, shorter term here, Zach, I see, that break below that low was A, and it looks like you allow for a rally. We've had a 2-day bounce, but it looks like you allow for a rally all the way back towards that old high at 4,300, which makes this like a flat. Am I correct?
I mean, that's my preferred path is to get is really to either count this as 5 down as the A wave. So that means we'd be looking for an A, B, C bounce up into that 4,400 region as the B wave. Or to continue to count this
I like that.
Down as June low as the A wave. This was a nominal lower low as the B. Then we're
the regular B.
And then we're going to look for 5 waves up as the C wave of that wider flat. Also,
I get a regular once in a while.
You got to drink some coffee, right? And you 29%
I do that. All right. That's pretty interesting. Go ahead.
I really try to avoid having a lot of alternate paths, but the problem is that once you get into corrective wave structure, now we're looking at corrective structure at a very large degree. I mean, bottom line is we need to see more of a bounce off this low. But one of the things that Garrett and I are very concerned about, particularly when we're looking at stocks like Apple and Microsoft, is that a lot of those look more like this might be the start of a larger C wave down already. So this might be an ABC down though, but ABC down of wave 1 of that larger C. So instead of getting more of a B wave bounce, they run into resistance here and maybe the 150-day moving average regions as a wave 2 bounce and then turn back down.
I have a
And I think
trend line
that's-
test around 39.40, 39.50 that it broke down out of. That
Right.
it could come back and retest.
And that 39.50 is the 100-day moving average and about a 50% retrace of this move down. So that's a perfect resistance region. So, you know, one of the things that I like to do, and I'm gonna switch screens on you one more time, is try and look for, you know, I try and avoid having those alternate counts, except when I'm trying to show where they can overlap. So here's just looking at off of the recent low. We have a move up that can count as 5 waves up, and we're working on a retrace. I don't think I like your 3680 to 3660 region that you're talking about. I mean, you could count this as maybe 1, 2, 3, 4, and 5 of the C wave. That's just under 382. So there is a chance that that morning low after the jobs holds at 3709. But I'd really like to see this be the 1-2 start of a choppier ending diagonal that takes us down closer to the 3660s as a retrace. But here's what I was talking about in terms of that overlap, is that if we're looking at this as an A, B, and we want to see 5 waves up for a C wave, that 5 waves up as the C wave could take place as an ending diagonal, where this 5 waves up is too small to be wave 1 of that C wave, but too big to be just wave 1 of 1. So if this is an A, B, and a C of wave 1 in an ending diagonal where all of those subwaves are ABC moves, it's a choppier move. It's going to look very corrective to start. This move up towards 39.50 that we talked about could be that wave 2 that a lot of people are very worried about and start to short, but it doesn't get follow through and it only gets a corrective move down, holds support in the 37.20s, and then invalidates that, but doesn't get impulsive follow through ever. And that same ABC up that could be wave 1 and an ABC down, that could be the A and the B wave of this yellow A wave in that new ABC correction off of the September low or October low, as 5 waves down for that A wave. So the cool thing that I see, I mean, it's kind of nerdy Elliott wave stuff, but that exact same structure is going to line up until you get to this part here where it's the same proportional move, whether it's the third of that ending diagonal for the white C wave or the C of the yellow A wave. Those should be the same move proportionally, but the wave structure for the gray wave 3 should be an ABC move, whereas this C wave should be 5 waves up.
Okay, so besides all the different ways we can correct, the takeaway is from the last time we talked, because of the action of taking out the June lows, looking for new highs is off the table, and we're just looking for spots to short the market to possibly take us down towards what, about, a lot of people are talking 3,000, 3,100, the pre-COVID high for some targets.
If we bounce closer to the 4,400 region, then a measured move for that C wave takes us down to the 3,200s, 3,300 region. That could extend a little bit more, maybe down to 2,900. But then we'd be looking for another bounce and then a move down. I don't think that this is that a lot of people. That's what I first showed when we started looking, that a lot of people keep
everyone
talking
wants
about
new highs.
Well, it's people, I really wanted new highs too, but you know, you gotta play with what you get. So I think, you know, really when we should have held that August 20 region as a 4th and gotten a 5th wave and then gotten a wave 2, we were willing to count this as, you know, a quicker wave 1 with less of a clear 4. And this is the wave 2, but that break of the first September
I was
low
surprised by the magnitude of the weakness from up there. At first I was glad, we're pulling back, I'll get my buy zone. And just, you know, there were some cycles that were negative until early October. So I said, you know, just wait until early October, see what markets are holding up the best. And one of those candidates would be silver, would put in higher lows, even though gold made a lower low at 1610. I'm interested in your structure in silver or miners, if you can show that.
Yeah, let's I'll jump to that in just a second. I just wanted to talk quickly about, I know a lot of people keep throwing out this 2008 fractal, and we know that markets are fractal,
Right.
but we also know there's a difference in context. So, we were looking at this move down as being an ABC move, where in 2007, 2008, that could have counted as 5 waves down for wave 1 of a larger C wave. But even given that aside, we were saying, we need to hold support here because that's where the support broke in the fractal. So there certainly is a risk, but we think that the context is still a little bit different. As we said, we're looking for that wider flat first, and then we're looking for more of a measured move C wave down, not a 3, 4, and 5 that we saw in 2008, because we're at a different spot. We're starting a new correction. This was actually the 5 waves down as the C wave in an expanded flat that started back in 2000.
Do you do anything with time after this correction? Perhaps we complete that decline to 3,200 or wherever the number stops by March or into the spring of next year?
Part of that depends on how long it takes us to get that B wave. If we're going to get 5 waves up as the C of B, then we could turn down sooner and maybe get our target sooner. As the magnitude of degree of the correction that we're looking at in the S&P, particularly if we want it to be more of a sideways, bigger, expanded flat that takes a decade or longer, the choppier that C wave down is to take us down, at each stage of the way, like the more people can get acclimated and adjust to just choppy, volatile markets that trend down and not, intense panic that that causes more bank failures and other stuff that I really don't want to see.
So it's more like cancer than a heart attack, this bear market.
I mean, I have that note on my larger S&P, the beans, bullets, beer, and bullion in a bunker, is the note, but like I really, hope that's more tongue in cheek.
Yeah. Okay. All right, great.
So this is that ratio chart. And I think you guys are right on the nose that this is, I was, ratio charts, you can't tell that you can't predict direction of the individual components directly. It's just looking for relative strength. But I was looking for a top, whether it was the B wave of an expanded flat or just an alt 5 waves up as wave 1 and a new ABC in the S&P to gold ratio chart. Since December, January. And that has turned down and been trending downwards in a corrective manner since then. And it is manifesting itself. I thought it was just going to be that gold was going to significantly outperform equities and that we were still going to be able to get another high, but it's looking like we're going to see continued weakness in equities as well as strength in the precious metals. So I do like that.
Because most people don't think that can happen. They're thinking back to COVID when we had risk off and they sold everything. Even the silver crashed to $12. But
you might be a few years older than me, but I'm old enough to remember, back when my subscribers used to argue with me that there was a perfect inverse correlation between equities and metals and miners. Equities are supposed to be up, so miners can't be.
Yeah, that hasn't happened in years.
It hasn't happened in years, but it's correlations work until they don't, and so we try and avoid arguing for specific correlations. Let me go to my larger time frame count on gold. So we're viewing this as a very large, not quite expanded flat because it didn't make a higher high. It came pretty close. And then we have 5 waves down for our C wave, holding that 382 retrace. So fits that flag that Blake was talking about in an uptrend. So great consolidation level. Also hitting some longer term support from Fib fans. So really like this low holding. We could have squeezed all of that into here. It did look like we had 5 waves up, but again, a lot of things failed to hold that June support. And then once, you get early warning signs too, when, you're looking at, okay, this looks like 5 waves up. This is your proportional correction. We should go. So we get a little mini 5 waves up and that breaks. that's your early warning sign from Elliott wave. So we know, all right, something else is playing out. So maybe you can allow for a
Good
deep,
to know.
but right now looking to see this fill out the rest of 5 waves up off the low. I think it's
Okay.
filling out as a leading diagonal. It doesn't have to. But the jobs report looks like that should have been all of our 4th wave. Maybe that can stretch a little bit deeper here since it is a diagonal, and should get one more higher high up towards 1750s and then back to 1700 to 1675. And that sets us up for the rest of this larger wave 1.
Okay.
So 3, 4, 5 up. That takes us into the 1900s and then another pullback from there. But, gold really looks great set up for a nice, rally.
2-year move. You're talking about
Exactly.
what, 2-3 years bull market?
I think so.
So you buy dips in the miners for a couple of years.
I think that is definitely the way to go. We're looking at, the miners gold, the GDX following similar structure off the low to gold. So we want to see a little bit more of that wave 1 off the low as 5 waves up, hold. I put the H here because we can see some inverse head and shoulders at a couple different degrees start to fill out.
Oh yeah.
So you can see the small one here.
Look at that
then a
3
slightly
drive.
bigger one.
You could. It looks like so. It ended with an Elliotticians called that. The low in July, the low in September, then the low recently. The 3 drive formation. That's also an ending diagonal in Elliott terms, right?
I think it can certainly count that way. This was looking more like an A, B, C move down for as a Y wave instead of a C wave, and then it looks like it kind of got a 5th wave of a C. So you could count this whole thing as an ending diagonal. I kind of forced it as an impulse because I was looking for the possibly one more low to tag that 2076 if we stayed under 23. But
Pretty classic
I've
3
kind of
drives.
opined exactly. I've kind of opined about how we have so much newer blood in the markets that WXY patterns are a little bit less familiar to people subconsciously. So a lot of times you'll have a perfect WABC of a Y wave, and then it gets a 5th wave down anyway.
Okay.
All right. But looking longer term, again, over that same, 18 to 24 months, can get that nice swing move up at least towards the 60 level would be ideal, if not even closer to 74 to 77.
Yeah.
In GDX.
Yeah.
So, and a lot of those, a lot of the individual miners are looking even stronger than that. So
there's Fortuna Silver and Endeavor. They really came out of the hole.
So they are really strong off the low. I don't like Fortuna as much just because this is, it doesn't have is more clear established history. I love stuff like First Majestic has a lot more structure off of prior lows that we can use as part of a bigger pattern.
Yeah. Okay. And I noticed that, and it gave me hope on the physical position or the futures position, is that AG did not make a new low when silver washed out on that stop hunt, Zach, and made new lows. That was a nice tell.
Yeah, the nice thing on silver is that this consolidation, it actually held higher relative to gold in some respects, but it can be a primary degree wave 1 and wave 2 off of the 2020 low, whereas here we're just looking at a primary wave 4 and getting 5 waves up as a larger primary wave 5 in gold. Silver can be working on just this bigger wave 1 of a primary wave 3 start.
Wow.
So again,
that could
want to
take
see
it
the
above.
rest.
I was kind of thinking, gold silver ratio reverting to the mean would be about 40. And if gold got to 2,400, that would give you 60 plus silver at a 40 to 1 ratio.
I could easily see us heading down to the 50 region, maybe even 47.
That's all right.
I'll give it that.
Okay.
Definitely looked like we topped there in that B wave in the gold silver ratio. So yeah, I do like the outperformance from silver on a percentage basis as well. Just, I struggle with, wanting to go for the percentage return or the clear wave structure. So sometimes I'll opt for gold that has a little bit more clarity to the subwave structure, even though you're not getting as much bang for your buck, just because I like the certainty of a more clear pattern than slightly more volatile silver. But
so the cleanest pattern is in the gold itself.
Gold itself is a little bit better than the baby brother, but that doesn't mean that some of the silver miners don't have really great patterns too.
Okay, so Zach, want to wrap? Oh, there's Wheaton. Okay, where's the best place for people to follow your work and Garrett's work? And
so you get the biggest assortment of our analysis at ElliottWaveTrader.net. We have a couple services on Seeking Alpha, and we offer free trials in both, so people can pick the platform that seems to work best with them. Our metals, miners, and agriculture service is only at ElliottWaveTrader.net, and that can be combined with Stockwaves at a 50% discount.
Wow, you want to show the site or drop a link? Drop a link for people. Can do that too.
Do both. My Zoom bar is over my.
Let me ask you this: is Lynn thinking that this recent pullback in the dollar is the beginning of something, or just another pullback before we see new highs?
I haven't seen what she posted on the dollar specifically, but she did post. She is very bullish on metals that she posted last night.
Okay. Okay.
There we go. Here's the link.
Okay.
But I do think on the dollar, I think this can be a pretty significant top for a long time. And whether we're counting this as an A, B, and then a really awkward 4 and 5 of a C wave, or just counting this as a diagonal up off the 2008 low, I think this ABC structure looks very complete. Whether that is the A, B, C of the 5th wave of the C wave, or whether that's just the ABC of the purple 5, I think we are due for a pretty big consolidation, which can take us back down towards the 80 region.
Wow.
I mean, first stop, plenty of stops along the way. I think it's going to be over. I mean, most of these currencies and commodities don't tend to give you long-term trending moves, except for I think the precious metals aside. More often you're oscillating in corrective structure between extremes. And I do think that the 114 region was pretty extreme for the dollar, and would like to see that work its way correctively down, which that could coincide a lot with the same larger, with the metals getting some nice upside, but also that larger ABC at the super cycle degree that we're looking at in the equities.
Yes. Yeah, because that would be a relief for the market.
Exactly.
Yeah. Okay. Well, Zach, great presentation, man.
Thanks a lot, Dale. Always a pleasure.
I root for you guys, and really appreciate you coming back and sharing your knowledge with us. So everyone check out Zach, and could follow him on Twitter at Zach Mannes, ZACMANNES, and have a great fall trading season, and let's get back together in the winter, see how things are playing out there.
Thank you very much. That sounds great.
All right. So
I think you've made it when you start getting copycat accounts on Twitter. So
yeah.
Post my actual @ there. I've had a couple of people with like 2 S's or 3 N's, and
yeah, I know, they just change a little detail and pretend to be. If they only knew what my real life was like, I don't think they'd want to pretend to be me.
Exactly.
But but you're right. Imitation's the highest form of flattery, except if they're crooks.
And we have to check in on our frog friend, our fully rely on God chart. That one,
okay.
We had to squeeze in the 4 and the 5. Wanted to see a better 4 or 5 hold similar to the market, but unlike the market, Some IPO from a couple months ago,
Oh,
or from a
okay.
year, but I think it's maybe a Chinese internet company. I'm not sure.
Okay.
A lot of these,
All right.
I like the ticker. It's JFrog Limited. I think it is a Chinese
Okay.
name, but it held a 618 retrace, kind of a funky corrective pattern. Really should have done better holding the September 1st low, but when a lot of other things were falling down in mid-September to break their June lows, this decided to hold its 618 retrace, has a great looking move off that low into resistance where we'd expect, based on Fibonacci pinball, for the wave 1 inside the 3 to stop. So
Huge
pull back
move.
to the 23 to 21 is a great entry opportunity with support at that 1930s, 1910.
See, so even though Zach had to give up Sesame Street when he became a big boy, he found a frog to, keep him company.
Right.
So good luck with Kermit, and thanks for your views here, Zach.
My pleasure.
Great
Take
way
care.
to cap off the week here. Thank you, buddy.
All right. Bye-bye.
All right, and everyone remember, could join the team in 15 minutes for the reaction to NFP. And thank you, everyone. Hope that we added value to what you're trying to accomplish. It's a very difficult endeavor, and have a great weekend. And don't just count your pips, count your blessings, and we'll see you next week. Adios. Thanks, Zach. You're welcome.